Most traders overlook the Asia range and treat it as background noise, but in my opinion, it's one of the easiest sessions to trade if approached with the right concepts. The Asia range actually sets the foundation for the whole daily range and what's going to happen in the next trading session, which is the London session. And in this video, I'm going to give you a time-based approach to the Asia session. Just like all of my videos, they are focused heavily on time because you know exactly when to sit in front of the markets and know exactly what the market should do at a certain time. So with that being said, let's get into this video. Welcome to the first official video of my blueprint model for the Asia session. I'm going to break down the exact framework you do need to trade this session, giving you the exact time and the opening price. With that being said, I'm also going to give you a flow chart that you need to follow with this process. The first component to this model and what you actually need to focus on is 9:30 p.m. This is going to be the time you're waiting for price to hunt liquidity. Just like all of my blueprint models, you have a very specific time that you're looking for price to hunt for liquidity. For example, this is where price is moving around in a range. And once we make this range, you know that this is where buy side liquidity is going to be resting above this high and sell side liquidity is going to be resting below this low. And with 9:30, as you're looking for a liquidity hunt, you are also using 8 p.m.'s opening price. So if we draw this out in time, for example, this blue line that I've drawn right here, this represents 8 p.m.'s opening price. If price is above this level, this means that this is in a short-term premium. If price is below this level, this means that price is in a short-term discount. So obviously you don't want to be selling in a discount and you don't want to be buying in a premium. You always want to be selling in a premium and buying in a discount. So as this opening price is opened up, you are looking for a range to be created. So this is where we are looking for a dealing range to be made. We have a high that I'm pointing at right now, and we have a low. So this was the highest point of the range. This was the lowest point of the range. As this is being created within the market, what are you waiting for? You are going to wait for liquidity to be taken at a key time. And that key time for us, if we're trading the Asia session, is 9:30. So once price pushes higher, you are looking for liquidity to be taken. Once we take out the liquidity, the next step for this process is very simple. You are just going to be aligning your time frames. So once we take out the buy side liquidity, if you're looking at this fractal on the M15, you are going to move on to the M5. And on the M5 time frame, this is where you are going to look for your change in the state of delivery. So you're looking for the range to be formed on the M15 time frame. Once we hunt liquidity at 9:30, and as we are above 8 p.m.'s opening price, you know that this is a market in a premium. So looking for short is actually high probability. And then you're waiting for a change in the state of delivery. So you'll move on to the M5. This move to the upside, as I've taught, order blocks that are born inside of a liquidity pool are very sensitive. And by definition, as I've taught you guys, order blocks are a change in the state of delivery. So you can see we make this high. Price pushes higher, takes out the buy side liquidity. These up close candles are being born inside of a what? They are being born inside of a liquidity pool. So we wait for price to trade lower, close below them. So as price closes below the up close candles made within a liquidity pool, this means that they should hold up 50% of the price level. So once we retrace back into there, this is where we can sell. And how can we validate this selling opportunity? It should hold up 50% of the up close candles. If it holds up 50%, this is where we know price is going to break down to the downside. And then we are looking for order blocks for entry. So in a bearish market, when price is pushing to the downside, all up close candles are going to support the market to the downside. So you can see every time it trades into an up close candle, this is going to support it to the downside. And in a bullish market, down close candles are going to support the market to the upside. And you can see every time price trades into a down close candle, it will support it to the upside. And again, if price retraces back into this level, this is where you can look for your short to complete off the external liquidity run. So trade into the full sell side liquidity, which was below here, or the external liquidity pool. And this is exactly the framework to my Asia session and my Asia range. You are looking for a range to form within the market. Once a range forms, you are waiting for 8 p.m.'s opening price, and then you're waiting for liquidity to be hunted within this time window. So within 9:30 or after 9:30, once we have taken liquidity, you will align your time frames wait for a change in delivery, and then look for order blocks to enter from. And this is very simple because if you have a lot of external factors going on everywhere, then it's going to be hard for you to make any decisions in front of these charts. And in trading, you get paid for your decision making, not how long you can sit in front of these charts, because this is not a business where you get paid for the time you are within the market. You actually get paid for your decision making, knowing when to get in and how you should be getting in, and knowing how to get out of the market as well. So here you should be looking to get out of the market or pay yourself within the internal liquidity pools, and then finally at the external liquidity pools. So now let's go over a flow chart of understanding this fractal, and then we will move on to the charts. So when you go to trade my Asia session blueprint model, this is exactly what you're going to focus on, and this is going to be the process that's running inside of your head. The first thing you're going to identify is a dealing range that's being made within the market before 9:30, and all of this time is on New York time. So once you've identified a range that's formed within the market before 9:30, you are going to wait for price to hunt liquidity of one side of that range. So you can see we have 9:30 and we have 8 p.m.'s opening price. This is where we're going to find a premium and a discount of the range. And once price takes out one side of the range, you are looking for a change in the state of delivery. And this is very important because this is going to tell you if the market actually wants to go in the direction you think it wants to go in. So if the market doesn't change its state of delivery, then this is what you're going to do. You are going to wait. You're going to wait until the market actually shows you it wants to go in the direction you want it to. If the delivery actually doesn't change and we don't trade in the direction you want it to, you actually have no trade because we haven't confirmed it wanted to go in that direction. And all you do now is step away and you trade the next day. You are doing nothing else. Trading is actually boring. It's not exciting. It's not very fun like as the movies make it. You have a process that you need to follow. If price does this, then you'll do that. If price doesn't do that, then you don't do this. And you just repeat this process and you do it over a time and you will be profitable. You can see as price then changes delivery, one thing is off within the system. If one thing is off within the system, why would you trust the system at that point? You need everything to align to trust your system because you know that's when your system performs the best. So if we don't change the state of delivery, you wait. If no delivery is being changed, then you step away from the charts and you repeat the process again. However, if we create a dealing range, we have a liquidity hunt at 9:30, and then we're using 8 p.m.'s opening price, one side of the range being taken, and we do actually change the state of delivery, you're looking for 50% of those up close candles to hold up the market to actually confirm it wants to go lower. Once it does that, you can enter within the market. And once you enter, you're aiming for a 1 to 2 or just getting your piece of the pie and getting out the market. So as long as you make money and as long as you are net positive, why would you complain about what you get? And as we're holding up 50%, this is where you can enter within the market. And once you enter, you can aim for a 1 to 2 trading setup. And you can look for price to take out the opposing end of the range, which is the external range. And you can look to partial within the internal liquidity pools. But with that being said, this is the process you should be following if you are trading my blueprint model for the Asia session. And now let's go over some chart examples. Now we are going to go over a chart example of the blueprint model. So I have the NASDAQ right here from the 21st of April. So the first thing you need to do is identify 9:30. So this dotted line that I'm going to put on the screen right here, this represents 9:30, and this is where we are waiting for price to hunt liquidity. And where are we waiting for price to hunt liquidity? Well, this is very easy. We are looking for price to hunt liquidity below this low because this is a swing low, and we are looking for price to hunt liquidity above this high. So why are we actually looking for price to hunt liquidity below this low? And this was the low that pushed the market back into the range. As this low pushed the market back into the range, it made a high. So we've made a new external liquidity pool. So we have buy side liquidity resting above this high, and we have sell side liquidity which is resting below this low. So for us to participate within this market, we are looking for price to hunt liquidity, and we are also looking at 8 p.m.'s opening price. This red line represents 8 p.m.'s opening price, and you can see how sensitive price actually is at these levels. We have buy side above this high, sell side below this low. As we are above 8 p.m., we know this is a premium market, so we are looking for price to hunt liquidity above this high. Once we take out the buy side liquidity above this high, we can look for a breakdown lower. And wonderful, as you can see at 9:30, we trade higher, take out the buy side liquidity. So these up close candles that were born inside of a liquidity pool, once price closes below them, we know that they should be sensitive. So this is exactly what we wait for. So going back to the flow chart that we went over at the start of the video, where we repeat a process. So once price changes delivery, then we can trust selling setups. And there we go. We close below the up close candles. So initially price drops down lower, but fails to close below these up close candles. As it fails to close below them, this is not a shorts for us right now. This area where prices close below these up close candles, this is where we can trust a selling setup. And we can sell at the open high of this candle, putting a stop loss just above this high, targeting the sell side liquidity of the opposing end of the range. So we put our stop loss just above this fair value gap just in case price wants to go higher, trade into the gap, then push to the downside. And as you can see, we get tagged in, and then all up close candles support the market to the downside. So as I said before, in a bullish market, up close candles are going to support the market to the downside. And this is exactly what we do. And then we trade into the sell side liquidity. So this was the exact approach to my Asia session blueprint model. And this is a very simple model. Same with my London and New York. And the less factors you actually need to consider, the better your trading is going to be, because you're going to have better decision making skills. And I hope you did find this video insightful. And if you do have any questions, just leave them in the comments down below and I will get back to you. But with that being said, if you do want to learn more from me one-on-one, you can apply for my one-on-one mentorship. That will be in the description down below as well. But again, I hope you found this video insightful. Remember, I'm rooting for you and I hope you do find success in this business. As always, enjoy the rest of your day.